this was the first year, second year, this was the 13th year, we can just put 14 in this formula, or 15 or 16 or 17, and then the valuation based on time is known. Same for stock to flow. We know the halving is in 2024. We know what the stock to flow ratio will do. It will double from today's stock to flow ratio, and we can plug that into the model and derive a value. So only those two models can be extrapolated, and you can see that this is exactly where I got my 100K to a 1 million Bitcoin range from that I predict in the next halving cycle.
Bitcoin, the world's first and most well-known cryptocurrency, has captured the attention of investors and enthusiasts alike due to its tremendous price fluctuations and potential for high returns. Amidst this fascination, PlanB, a popular crypto personality, has gained attention for his analysis of Bitcoin valuation models. In his latest video, PlanB delves into the 4 valuation models and explored their pros, cons, and potential implications for predicting the future price of Bitcoin. PlanB introduces 4 valuation models for Bitcoin: the time model, the stock-to-flow model, the difficulty model, and the UTXO model. Each of these models takes different factors into account to determine the value of Bitcoin over time. According to PlanB, the time model, which is represented by a light blue line, this approximates adoption over time. The logic behind this model is that as adoption increases, so does the price of Bitcoin. For stock-to-flow model, which is depicted as a dark blue line, this model measures scarcity by analyzing the stock-to-flow ratio of Bitcoin. As scarcity increases, the Bitcoin price is expected to rise. The difficulty model, shown in red, tracks the network power of the Bitcoin network, indicating that the higher the network power, the higher the price of Bitcoin. And finally, the UTXO model, presented as a green line, this model assesses the distribution of Bitcoin over UTXO, unspent transaction outputs. A wider distribution leads to an increase in Bitcoin's price. Let us now get into the video as PlanB uses these models to predict a potential range of $100,000 to $1 million for Bitcoin during the next halving cycle. As you watch, make sure to like this video, subscribe, and drop your comments.
Are those models really? We could look at the goodness of fit, R squared, which is 97% for the time model, stock to flow model, and the UTXO model, and it's 94% for the difficulty model. But then R squared doesn't say anything, and I guess the very important thing to remember is correlation between those 4 factors and the Bitcoin price is not causation. The relation can be spurious, it can be incorrect. So you should always remember that. And also, I mean, those are very simple models based on one factor. So you can't expect those models to be 100% correct. 94 and 97% is actually quite good. And 100% would be impossible with these very simple models based on one variable. Some people even say that models are invalid and useless because variable X, Y, or Z is not in there. Like, okay, a demand is not in there, so the model is not useful. Or the dollar M2 money supply is not in there, so the models are not useful. That is not true. That's not true at all. I mean, yes, a lot of factors influence the price, not only those 4 factors. You have all the macro factors like the Fed and inflation and interest rates and the money supply of the dollar. You have the SEC with their ETF approvals. You have exchanges that go bust like FTX recently. All those factors have an impact on price. But most of those factors are random events. The Russia war, who could have predicted it? The mining ban of Russia or of China in 2021, who could have predicted that? Those can't be modeled. What we are looking for in models is the bigger structural factors that play a role in the valuation.
One crucial point PlanB emphasizes is the distinction between value and price. While many people conflate the two, value refers to the intrinsic worth of an asset, while price is influenced by supply and demand. Valuation models are focused on determining the value of Bitcoin based on various factors, not predicting its exact price. PlanB also addresses emotional reactions some individuals have towards the stock-to-flow model, particularly when Bitcoin's price deviates from the model's predictions. He points out that all models have limitations and that historical performance does not guarantee future accuracy. Emotional biases may influence how individuals perceive the model's effectiveness. He suggests using valuation models to assess whether Bitcoin is overvalued or undervalued at any given time. If Bitcoin is undervalued compared to the models, it might be an opportune time to buy, while overvaluation might indicate a cautious approach. However, while the models have shown relatively high goodness of fit, 97 for time, stock-to-flow, and UTXO models, and 94 for the difficulty model, they are still simplifications of reality. Correlation between factors and Bitcoin price is not causation, and random events may influence price movements unpredictably. With the Bitcoin predictions flying around, even long-dormant Bitcoin whales can't sit still. Several big investors holding millions of dollars in Bitcoin moved their holdings last week after years of dormancy. On July 20, two wallets from 2011, each holding 10 Bitcoin, valued at $292,767 as of this writing, moved their holdings to new locations. The next day, a wallet holding 5 Bitcoin, $146,383, budged after 12 years of inactivity. Then around $30.3 million in digital gold, or 1,037 Bitcoin, moved after its owner put it in a new wallet for the first time since 2012. The price of the cryptocurrency was $4.92 per coin back then. Finally, on July 24, a wallet from 2010 moved a hefty 50 Bitcoin, or $1.4 million. Bitcoin whales are investors who hoard huge amounts of Bitcoin, at least 1,000 Bitcoin, and don't touch it for years, sitting on astronomical gains as a result. Such investors have proven to be more successful than traders that buy and sell Bitcoin over a short period. The asset is extremely volatile in the short term, but over the past 10 years, it has shot up from under $95 per coin to $29,203, a 30,700% increase. Whales have certainly been on the move this year. Blockchain data firm Glassnode said in a Monday report that there has been a dramatic uptick over recent months, and noted that several whales have been moving holdings to exchanges, usually the best way to cash out or shift holdings to other digital assets. It isn't clear whether these whales are individuals or companies, but Dr. Kirill Kretov, a developer of tools for automated trading and blockchain analysis, previously told Decrypt that these transactions might represent commercial entities buying Bitcoin from individuals. In other news, Worldcoin, the crypto project launched by OpenAI Sam Altman, is being investigated by French data protection regulator CNI for questionable practices, the regulator told CoinDesk. The legality of this data collection seems questionable, as do the conditions for the preservation of biometric data, a CNIL spokesperson said in a written statement, referring to Worldcoin's practice of scanning retinas to ensure that no single person can claim crypto rewards twice. Worldcoin went live on Monday, and its cheerleaders say it could spread crypto wider than Bitcoin, but has drawn the ire of privacy watchdogs in the UK, where the Information Commissioner's Office has warned that people must freely give consent to the processing of their data and be able to withdraw it without detriment. According to a Blockworks newsletter exploring the concerns around the Worldcoin project, Worldcoin will need to assemble a vast database of iris data, but not everyone is eager to gaze into an orb. In the bootstrapping phase, at least you had to pay people to scan their eyes. And so Worldcoin turned to the global south, home to the cheapest eyeballs, and played a dark game of what will people do for money. Incredibly, Worldcoin was unprepared for an obvious consequence of this rollout strategy: a black market for verified credentials. You can now seemingly buy a World ID for as little as $30. Anyone, then, with more than $30 on hand can command more than one digital identity. Although Worldcoin is aware of this issue and has proposed solutions to resolve it, connecting real people to digital identities is a thorny puzzle. Worldcoin does not fix this, and it's unlikely it ever can, since mething in the design can stop professional Sybil attackers farming eyeballs on the ground level through nefarious means. It also pointed out that the fact that Worldcoin's co-founder Sam Altman also heads up OpenAI, a firm currently being sued over allegations of dubious uses of large data sets, asks more questions than it answers. What are your views regarding the Worldcoin project? Would you let your iris get scanned for some coins? Let us know your thoughts in the comment section below, and also make sure to give us a like, subscribe, and turn on notifications. Thanks for watching.